Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock, with news bank lending distortions are catching attention in both China and the US. But first, China is now on a full national holiday for a week, the year of the wood dragon, and authorities have managed to stave off a share market crisis before they closed in Shanghai, even if Hong Kong did get the wobbles again on Friday. In China, under official pressure, banks are shoveling out the loans. Banks extended more than 4.9 trillion yuan in new loans in January, a record high since comparable records began in 2004 and beating forecasts of 4.5 trillion jump. But while the levels may be high, the growth isn't. In fact, these expansions from a year ago are the least since 2004. That has led to calls to do more. In Japan, the Nikkei index jumped as much as 1.1% before settling only marginally higher on Friday. But that's its highest level in 34 years, as strong corporate earnings, a weakening yen and a dovish outlook on the Bank of Japan's monetary policy pushed markets to these new heights. On Thursday, a Bank of Japan deputy governor said the central bank would not aggressively tighten its monetary policy, even if it eventually decides to end negative interest rates there. In the US, the S&P 500 closed above the 5,000 index level for the first time ever. It was up 0.6% on Friday their time, up 1.4% for the week, and up 6% so far this year. And all this is in the face of rising bond yields, which makes it a bit unusual. The Fed's win in its battle against inflation while keeping employment growing is a key factor that profits remain robust. Investors seem impressed. In January, Canada added 37,000 new jobs in a month, a surprise because a decrease was anticipated. But 49,000 were part-time positions, and full-time employment fell 12,000. Their jobless rate eased slightly on this data, also not expected. Unfortunately for them, their population grew faster than employment. With China largely closed for its New Year holidays, commodity prices are likely to just meander along with little direction. But that won't stop chocolate prices racing higher on climate-related supply challenges. Cocoa prices were up 17% last week alone, to be up 42% so far this year, up 123% in a year. Chocolate is back only as a luxury item. The US Treasury 10-year yield starts today at 4.18% and down 1 basis point from Saturday. And the price of gold will start today up $1 at just on $2,024 an ounce. However, oil prices are still just on $76.50 a barrel in the US, while the international Brent price is still just over $81.50 a barrel. And the Kiwi dollar starts today at just on 61.5 US cents and marginally firmer than this time is on Saturday. Against the Aussie, we're unchanged at 94.3 Australian cents, but that's a 14-month high. Against the euro, we're just over 57 euro cents and also firmish. That all means our trade-weighted index starts today just on 70.9 and its 2024 high. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.